Welcome to the Global Investor Podcast, a show that focuses on helping foreign investors enter the lucrative U.S. real estate market. Host Charles Carillo combines decades of real estate investing experience with a professional background in international banking to interview experts in all areas of U.S. real estate investing. Now, here's your host, Charles Carillo.
Welcome to another episode of the Global Investors Podcast. I'm your host, Charles Carillo. Today we have Taylor Loht. Taylor has partnered in over $50 million of multifamily and self-storage investments as both a general partner and as a passive investor through retirement accounts. He invests remotely and never deals directly with tenants. So thank you so much for being on the show.
It's great to talk with you again. It's been a couple of weeks since we recorded your interview for my show, and it's a pleasure to get to sit down with you, here in the spring.
Yeah, it's great to connect again. So give us a little background, Taylor, on your prior life to investing in real estate.
Sure. So like a lot of real estate investors out there, my background is in engineering. I think we are, I hate to say overrepresented in the real estate investing space, but there are quite a few of us. I'm not sure precisely why. I don't think we like numbers. So yeah, went to school for chemical engineering and, went straight to doing that and realized pretty quickly, I think I always knew it in my heart that I hate cubicles and realized I had to find a way out and, kind of plan for my future and how am I going to meet my financial goals. And through over years of really digging into it, I was going to go the typical route that, I feel like many of us are told to do and go get additional schooling. I was going to go to business school, get an MBA. And as I was going through that process, took the test and was preparing, to start applying, I read this book, that troublesome little book that so many real estate investors have read, Rich Dad, Poor Dad. And that totally turned the concept of going for more school around on me. And I realized that, that's not the way to meet my financial goals. I always liked real estate, but I never thought that it could be a way to really grow wealth, and meet my goals. And just, dug more into it and decided that, okay, that's what I want to do. I'm not going to go for more schooling. I'm going to go and invest and figure out how to make it happen.
Nice. So why did you choose real estate as your investment vehicle with how you're doing it now versus different? There's so many different ways of making money in real estate. I mean, obviously, if you're going to make wealth, the investing portion is more advantageous than others, but.
Yeah, absolutely. So that's a great question. And I think for anybody out there who wants to invest in real estate, and if you're like me, you get this thing called shiny object syndrome, where every week or every couple of months, right, you kind of change tracks and decide, this is the thing I want to work on. Especially when you get started, you don't realize how many options there are in real estate. It's truly incredible the number of ways there are to invest in real estate, and they all have relative advantages and disadvantages. For my purposes, you kind of read my little bio there. You said I don't deal with tenants directly, and that was a huge part of what was important to me and remains important to me is I don't want to manage properties. I never did. That was one of the things that really held me back, or I used as an excuse to hold myself back in the beginning, is that the only way I kind of knew how to do it, right, was you go buy a house and you rent it out, and then you go buy another one, you rent it out, and just do that. But I couldn't really get past that thing of I just don't want to deal with tenants collecting rents and leaky toilets and all the stuff that comes along with it.
Yeah.
And in getting more involved and learning more about the options that are available, eventually I came upon syndication, which allows us to buy bigger properties and that are valued on basically commercial, valued on the income rather than comps and things like that. And maybe it goes back to that engineer liking numbers thing, but that really spoke to me a lot more than the more residential model. And I suppose on an emotional level, I have this one thing that sticks out in my mind. The first place I rented after I got out of college was just it's just a tenant somewhere in this town home in Lancaster, Pennsylvania. Shout out if anybody's in Lancaster, Pennsylvania. And I was driving to work to a job that was, a fine job, work with nice people, but I absolutely hated it. It was the wrong fit for me. Driving in the morning, and I drove past the office on my way to the highway, and sitting outside the office, I saw this Audi S7, and I love Audis. I love cars. And I was like, I bet whoever drives that car owns this apartment complex. Because I'm sure nobody who lives in this apartment complex is driving that S7. And I think that once it kind of clicked, you can, through syndication, you can buy apartment complexes. And I'm not one of those guys that says, go buy apartments and you'll get an Audi in 6 months or whatever. But once I clicked and I realized that there's a good chance the person who drives that Audi and owns this apartment complex probably did it this way. I was like, that's what I want to do. So that's what I chose to do.
It's pretty powerful. I was explaining it to someone I remember in college, and they're like, oh, why do you want to be a landlord? And I go, you rent an apartment? They go, yeah. I go, how often is your landlord there? And they go, I don't know who it is. Exactly. So it's like, that was the simplest way of explaining to someone. And it's also like, a couple of years after getting out of college, we went through the Great Recession, or I did, right? And you talk to people and they're like, oh, real estate's getting hit. I'm like, oh, did your rent go down? Did they decrease your rent? And they go, no. Oh, okay. So there's so many things by the news, and especially today with like every platform, there's a new platform every week, and we get information. Most of the information, the majority of it, doesn't pertain to us, and there's nothing we can do about it, but it's just put in our face. And I feel that when you look at it in the real estate model over hundreds and thousands of years, that it's worked in one way or another. And it's a great model, especially with multifamily, which is something that I know you and I focus on. So what were your first real estate investments?
So my first investment was a passive investment in an apartment syndication.
Mm-hmm.
That was after I decided syndication is the route I wanted to go, and I wanted to do it actively. But I also realized that, okay, there are a lot of steps between getting me from no real estate investing experience to buying apartment complexes. And, I went through a lot of, education, more formal, so to speak, and more self-education to learn what makes a good deal and a bad deal. And, okay, how can I find the money? Fortunately for me, I picked a relatively high paying profession, and I have a very, I come from fortunate background, right? I went to a good school. My parents put me through college, which I'm exceptionally grateful for. And then once I got out and I started earning money, I was very, very careful with that money, and immediately started investing. I invested in stocks and bonds, just stocks originally. So, I had a decent nest egg, kind of saved up to get into real estate investments. So, yeah, two apartment complexes in Atlanta. And that kind of didn't go as expected, so to speak.
Tell us more. Why? What happened?
Sure, happy to get into that. And just before I dive into it, the sponsor has come on my show, and we've discussed this in detail, so this is not secret, right? But basically, two apartment complexes in the southern part of Atlanta. And the property manager, the person who owned the property management company, was brought in as a general partner on this deal, which means that he had, in my opinion, now more control than he should. But he was one of the principals kind of arranging the deal. And over time, it came out the sponsor who put the whole deal together discovered that there were some things wrong with the numbers. And it's still not 100% clear to me exactly what keyed him in, but it looked like that, we were being overbilled for repairs, and the gentleman was probably skimming money off the top because the property manager has a lot of control over the finances if you let them have a lot of control. So once the sponsor discovered that he went through, the whole legal battle and process to revoke the gentleman's general partnership shares, but also you have to go find new property management now. Yeah. So there was a big arbitration that lasted years of, okay, so the guy thought, he shouldn't have his general partnership shares revoked and, all these other things. Oh. And the properties have been sold. We ended up making money, fortunately, but I think in many ways, if we hadn't been in a, rising tide type of market where it's just been good to be a real estate investor for the last little bit over a decade, we might have lost money. They didn't cash flow, and the cap rates kept compressing. And toward the end of it, a few months before the properties were sold, they were sold a couple of years ago now. The gentleman who ran the property management company ended up seemingly taking his own life and leaving a widow and children behind that we were in litigation with, and fortunately the property manager, the sponsor is a good guy and really try to make them whole and make it hopefully not too painful through the arbitration process. And it's all over now, but it's a big mess.
Wow. And that's something because it would have been a lot easier of a process if you did not, if the general partners had not partnered with the property manager. So the thing was that you hear in syndication all the time, just listeners and anybody else, is that when you're trying to put together your deal and in the beginning for a first syndication deal, and you need all these different people that you might not have. You don't have experience, you don't have money, you don't have all this stuff. And so they're like, oh, partner with your broker, right? Your real estate broker that's bringing you the deal. And then he can, roll some of his commission in. Partner with your property manager. Partner with this other person over here. And you partner with all these people, but the problem is you can't get out of it. It's difficult. I mean, when you're switching property management, it's much simpler. You have this, if it's an annual contract up front that renews every month or every year, and you can kind of cancel within 60 days, and you should be on that checking account. And it's a much easier. It's difficult, trust me, because you're going to have hundreds of units that are probably controlled by that person, right? And you have to move everybody, but you don't have to go to arbitration. Hopefully, you don't have to go into a litigation route. So it's with anybody you partner with, whether you're passive or active. How important it is with this story that shows, everybody has to be in alignment, and the person that's managing the deal actually has to know what the hell they're doing, which in this situation, I guess, didn't, right?
Well, the sponsor's been on my show, and he's got probably well over 5, maybe 6,000 units by now. And he's done very well. I know he was in other deals.
But the property manager, the sponsor,
the property manager, sure.
Property manager wasn't handling it, and the sponsor's a sponsor. Obviously, they've made everybody whole, and they, everything, when they're lucky that where they bought it from and everything worked out well. But the property manager, them partnering with that property manager, that person obviously did not have the expertise to manage that, and the property manager is the most important piece, right? So,
yeah, absolutely, and I've talked with other folks who have kind of gone that route and given either ownership or maybe more control, more sway to their property manager, and I've never seen it work out. I'm sure it has, right? And that's not the same as, you see a lot of, especially larger sponsors now, starting their own property management company. It's a completely different story. They control the whole thing. They're in charge. You still have to have a lot of trust and faith in that sponsor, but it's not like you have competing incentives there like you might with the property management. And I think you mentioned about controlling accounts. I know folks that's been a big problem for, who've had to terminate property managers. And in my deals, we've never had to, other than this, right? We've never had to fire a property manager, fortunately, and it's still not something that I want to deal with. But if it does get to that point, you want it to be as minimally invasive as possible. I don't see there's any way that it could be smooth, right? But there's just so many horror stories out there of we said we were firing them, showed up, said, get out of the office. And they knew they were already shredding documents and stuff. And
Oh, wow.
I've heard those stories, and
Mm-hmm.
it's never going to be clean, but hopefully you can at least keep it, professional.
Yeah. Yeah. That's kind of the nature of the business, where you're going to have people that it doesn't work out working with. But it was interesting. I spoke to one other sponsor before, and they were telling me on one of their first deals, they partnered with their broker that brought them the deal, and the broker didn't buy in or become part of the general partnership in his own name. He started a LLC and got into the property. And then what he did later on was he sold his share of the LLC. So that sponsor is now in business with someone he doesn't even know, because they was like, oh yeah, I'll roll my commission back in. Well, he rolled it back in, but then he wanted to extract it. And he knew from the beginning, obviously. So now you're in business with someone. There's so many different ways. That you have to it's like you just have to know who you're in business with, and you have to make sure. The problem there was that sponsor should never have brought someone in that didn't have the same mentality. Like, this guy wants a commission and that's it, right? He doesn't want to become a syndication superstar or whatever, right? So the thing though is that with that happening, it's just crazy. You just have to know everything about it's interesting. So you started off as a passive investor. How did that help you when you went to the active role and active investor? Was the passive investor you were working with, were you pretty was he pretty involved with you, with telling you what was going on, and you were kind of learning the ropes, or?
So that's a great question. In learning the ropes, I have a coach / mentor. And the sponsor of that particular deal, he provided, financials and everything, and would let us review. But I, of course, want to be respectful of his time. I was not a whale investor coming into his deals, and I didn't want to, use more time than I think I'm reasonably entitled to, as someone who has invested capital with him. I think there's some, right, but there's certainly a limit. So I was respectful of his time, but that particular experience, that so to speak horror story. Like I said, we still made money, but I think that was almost an accident that we made money. But that was a great learning experience, right? Because it's one of those things where, fool me once versus fool me twice. Okay, well, hopefully I never get fooled in that way again, whether it's in a deal that I'm a passive investor in, or more importantly, a deal that I'm sponsoring and, I have investor capital involved, because that's a whole other set of problems. That I can handle losing my own money, but investor money is another set of responsibilities.
Oh yeah, it's a whole different thing. So let's talk about that. So how do you find the sponsors, and how do you vet them now that you want to partner with, where you're obviously bringing your own money into, but you're going to have investors' money, and how do you do that?
I do a lot of networking. So I've got a bunch of ways, right? And we find ourselves here in 2021 at the hopefully tail end of the pandemic. So in-person networking should hopefully resume again. I see some of it happening. I feel like it might be a little reckless still at this point. I don't know. I'll have the second vaccine in a week and a half, but myself, and more people are getting vaccinated. But pre-pandemic, going to conferences in person and making that initial connection, and then just continually following up, right? And seeing who you think you can work with well, and who has kind of the same goals and hopefully has ethics and the right experience that you want to partner with. And hey, how can I add value to you? And it's obviously a two-way street. How can I help them, and how can they help me grow my business, right? Because we need to be mutually beneficial. I also again, pre-pandemic, run a networking event meetup in my city of Richmond. If anybody's in Richmond, you're certainly welcome to join us. That's gone online. I've got my own podcast and email list, and that's not necessarily for sponsors, but that shows other sponsors who I know that, hey, I'm serious. I'm in this business. It's all showing that the brand is there, and I'm qualified to partner with folks. And I'm very slow to get into any kind of business partnership. I think folks in this some folks in this space are really I don't want to say fast, but a lot faster than me at partnering with others, and that ain't me.
Yeah, that's a safe way of doing
slow.
it. I like to, when I'm talking to sponsors, usually will sometimes passively invest with them first. I just like to see how the communication goes, and I like to review the underwriting and kind of see. And it's a very small network of, real estate investing, commercial, which was what we are in, commercial, multifamily, and other assets. It's not that large of a business, of a network, right? It's pretty small. And you talk to someone, and they're going to know someone that you probably just got off the phone with, and so. You just have to be careful about make sure you treat everybody right, which you always should. But it's also one of the things too is that who you're getting involved with, right? And I think the same thing, like you said, a lot of newer people in syndication, they're raising a lot of money and they're partnering with a lot of people. And I just got off the phone with someone yesterday about that. And I'm like, so they're like, oh, I'm working with this group for the last 2 months or something like this, and we're doing. And you don't want to. I'm not anybody's coach or mentor for this person, so it doesn't. But you're like, how did you vet them? Just because you heard them in a Facebook group, and now you're with them. And I think a lot of that goes on, and it's not the best way of doing it. But so tell us about the structure of your business. What assets are you looking for? What is your company's role when you're acquiring them?
Sure, absolutely. So as far as assets we're looking for, historically it's been multifamily apartment buildings, over 100 units, hopefully, bigger than that. 150 plus is ideal. I like the Southeast, and my company's role is, we do work on asset management, due diligence, bring capital to the table, and there are a lot of laws and regulations around that as well. So we're not specifically compensated for that, but involved in bringing the property to close and then helping it get from close to disposition. Really is where I'm involved, and moving forward. Again, you mentioned at the top that I've done some storage investing. I started as a passive investor there to get diversification. I'd read about storage and the interesting kind of market dynamics there, but I never really believed before I get into it that people will pay $100 a month to put their crap in a garage that we own. I was a little skeptical about that because I never say never, but I can't really see myself ever using a storage unit. I was talking to someone the other day. Like I said, I like cars, but where we live in the city, I don't have the parking to have a toy car. I've got my daily driver type of car, but I don't have the space to have a toy. And they were saying, oh, just go, buy a toy. You can afford it and rent a storage unit. It's only $100 a month, or you get a smaller one for $60 a month. And I was like, there's no chance in the world. I was like, I'd rather own the storage than rent the storage. But anyway, through the COVID pandemic, we've kind of obviously seen a regulatory shift in terms of evictions and our ability to collect. Unfortunately, for our properties, it hasn't been a major disruption. One of our properties has actually set collections and occupancy records for the whole time, the years that we've owned it. Through the pandemic, it's continued to rise in collections, and it's because our property manager and the gals on site are just awesome, totally awesome. But I see the winds shifting in a more, I don't want to say permanent way in that regard, but I think in a more long-term way too. As we talk, the CDC eviction moratorium was extended until June, the end of June, I believe, of 2021. And I'm not a betting man. I hate gambling. I've played blackjack once. My buddy helped me, and I made $60, and that was the end of my gambling career. He lost money. I made money. He was sitting right next to me. So, I buy him drinks when I see him. But if I were to place a bet on it, I see it only getting more difficult to collect on rents and to, pursue those rents. combine that with, I don't want to say an overheated market in multifamily, right? Because you don't know what the future holds, but I mean, cap rates are at all-time lows. Interest rates are also at all-time lows, and that spread is actually fairly high compared to historically. But just with all those kind of factors combined, I have begun to shift my focus to more alternative assets. Specifically, self-storage is really my thing right now, and I'm digging into that. I don't see myself ever going mobile home park route. It may be, but to get back to, I'd mentioned shiny object syndrome previously. I always had that in the forefront of my mind that, okay, I'm committed to making this shift. So, that's what I'm doing. So currently I'm working on marketing to storage owners, and we're to see where that goes. Make it
Nice.
happen.
Nice. Yeah, with the CDC and what we have going on now for the administration, I feel that it's definitely going into 2022. And I mean, it might even go longer. I don't know. But I think there's holes being poked in that in certain states, like a lot of the states that we invest into, landlord-friendly states. So I see that not being as strong now as it was a year ago or several months ago, let's say. But that's a kind of a whole different subject there. But so how are you able to manage everything remotely? Like, do you have how's your team for your specific business? And how does that when you're assisting other of your co-sponsors when taking down deals?
Yeah. So, I mean, we've got, investor portals set up and everything. And I think, right now they fortunately more and more options have come on the market. And kind of when I started, there might've been a couple of investor portal products out there, but that has fortunately grown over time. And that
they were very expensive back then too.
Yes, absolutely. And they've gotten, I don't want to say cheaper, but they've gotten less expensive, or less expensive options have come on. And the real advantage there, yes, it helps you scale, but to me, the real advantage is security, cybersecurity. You and I both know people who have lost money and whose investors have lost money to wire fraud. One of the more common attacks is they hack one party's email. Hackers hack one party's email and put a script in place so that it intercepts wiring instructions and then injects the hacker's wiring instructions. And then the unsuspecting investor receives those wiring instructions, doesn't check them, and then wires 25 up to hundreds of thousands of dollars to a fraudulent account. And for us regular guys, that money's gone. That happened to Barbara Corcoran from Shark Tank. I think probably about maybe 2.5 years ago now. She got her money back, but she's a shark, and we're not. So we're not getting that money back. And so I think those are really critical. For our property managers all have the critical software packages in place, and we do monthly financials and read through those. And for myself, I'm still a small guy. I've been working on hiring an executive assistant for maybe the last month and a half. I had a few people come on and try out, and unfortunately they haven't worked out yet. I'm still working on finding the right one. But for my team, that's really number one, my number one priority. And the planning aspect of that is probably the most difficult, maybe not the most difficult part, but, balancing how can they help me grow, find more opportunities, network with more investors, but also when's that critical point where, okay, now I need to be handling 100% of everything, because, I'm not at a point where I'm going to be trusting an executive assistant with investor information or anything like that. I'm holding that because, again, to me, security is number one. Right. And so it's going to be a while till I have, I think, folks that I feel are to the caliber that they can handle sensitive information.
Yeah, for sure. And that's something that using the portal kind of, you avoid a lot of people in the general partnership having a lot of personal information and people on their team by using the portal as well, because it's not an email going back and forth or scan documents. I mean, never trust any wire instructions you have emailed to you. And that's the great thing about the portal too, because you're looking through the subscription agreement, the booklet, and you get down and there's actually the wire information there, and you can verify it's the law office where you're sending it to, or whatever it might be, the escrow account. So that's awesome. Yeah, it's a lot of great information. So Taylor, is there anything else that you want to impart on our audience before we let you give all your contact information?
Oh, well, thank you very much. It's a great question. I suppose I would follow up to that statement of you're in the portal reading the subscription documents to see the wiring instructions in there. Still call the sponsor and make sure that's the right number. Yeah. It takes you not even 5 minutes, and hopefully you know the sponsor well enough to know their phone number and what their voice sounds like. And if it's a 5-minute call, that could maybe save you a few $100,000. I'll make that call every day. I'll take that call every day, and I hope your listeners would do the same. And this is you have a very international show, and I definitely appreciate that. And if there's anyone out there listening who, especially Europe, maybe Eastern Europe, wants to meet up and chat sometime, I've been looking for a reason to make a trip over there. So maybe we'll sit down in Croatia or whatever and have a coffee. But
nice.
Yeah, I wanted to thank everybody for tuning in today, and wish you all the best of luck in buying some, cash flowing real estate.
Yeah, we have a bunch of investors, or we have a bunch of listeners. We have some investors from Eastern Europe, but Central and Eastern Europe, you'll love it over there. All different areas. I love it. I've spent months at a time over there. I have a really good friend, business partner, and investor now that is over in Serbia area. So it's definitely it's very nice. It's a very up and coming area. And that's going to be someplace possibly for investing in the future. Who knows? But so give us your information, your contact information, your websites and stuff, and I'll put it all into the show notes.
Sure, will do. So my kind of main place that y'all can find me is the Passive Wealth Strategy Show. You can find that show at passivewealthstrategy.com. It's a podcast, probably fairly similar to yours. We talk about real estate investing and wealth generation with a passive investor bent. I'm trying to help people escape the Wall Street casino and invest in real assets on Main Street. If folks want to reach out directly, my email is Taylor, Taylor, at passivewealthstrategy.com. You can follow me on Instagram, Passive Wealth Strategies with underscores in there. And I want to again thank everybody for tuning in today, and hope we can connect and maybe we can do some business together.
Yeah, hopefully people will reach out to you and make more than your $60 in blackjack at that casino. And hopefully we can connect here in the future when everything opens up again.
Absolutely. I do have a giveaway on my website. It's the top ways to escape Wall Street and invest in Main Street. You go to the website, it's just a pop-up. And that'll send you, again, this is my opinions, but the top ways to get out of the Wall Street casino and invest in real assets, real businesses. It's not just real estate syndication, although spoiler alert, that is one of them. Obviously, I believe in it because it's what I do and it's what I invest in, but it's not the only thing out there. It's not the only way to invest in real estate, and here to help everybody figure out what's right for them and move down that path.
Well, thanks a lot, Taylor. Also on his website, there's a whole strategy page there about finding your goals, knowing your goals, your whys, and kind of focusing, not doing the shiny penny thing. And so sounds great. Thank you very much, and look forward to talking to you in the future, man.
All right. Thank you, Charles.
Bye-bye.
Bye-bye.
Hi guys, it's Charles from the Global Investors Podcast. I hope you enjoyed the show. If you're interested in getting involved with real estate, but you don't know where to begin, set up a free 30-minute strategy call with me at schedulecharles.com. That's schedulecharles.com. Thank you.
Thank you for listening to the Global Investor Podcast. If you like the show, be sure to subscribe on iTunes or Google Play to get new weekly episodes. For more resources and to receive our newsletter, please visit globalinvestorpodcast.com. And don't forget to join us next week for another episode.
Nothing in this episode should be considered specific, personal, or professional advice. Any investment opportunities mentioned on this podcast are limited to accredited investors. Any investments will only be made with proper disclosure, subscription documentation, and are subject to all applicable laws. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice. Opinions of guests are their own. Information is not guaranteed. All investment strategies have the potential for profit or loss. The host is operating on behalf of Syndication Superstars LLC exclusively.